So the US finally admits that BRICS working together is a big problem. Now we know the world is going multipolar. We have the Western Club on one side and BRICS on the other. Now one bloc is growing stronger while the other is in disarray and they are hammering each other's economies. Now the US is trying to subjugate the G7 with its tariff war. Trump is going to teach his allies the meaning of reshoring. But BRICS is not falling apart. They are working together like never before, especially when it comes to trade with China, and this is why Washington is in panic mode. In a recent ASEAN and GCC summit, China is extending the reach of BRICS. The aim is to connect the entire of Asia and Middle East together to form a formidable trading bloc. The Chinese have laid out the plan, built an economic circle with major growth poles. It's all about trade and bringing massive amounts of prosperity. And obviously, the agenda is to build a pole that is sanction proof. And if you're the US, this is a nightmare scenario. If trade with China grows, it poses a ton of problems. Firstly, it'll be harder to sanction China, especially if Beijing integrates further into regional economies. Secondly, the dollar's hegemony will be in deep trouble, and to no one's surprise, Lutnick is trying his luck to break apart BRICS. It's the good old divide and conquer playbook. Trump's best friend has a warning for BRICS.
There were certain things that the Indian government did that generally rubbed the United States the wrong way. For instance, you generally buy your military gear from Russia. That's a way to kind of get up, under the skin of America if you're going to buy your armaments from Russia. India is starting to move towards buying the military equipment from the United States, which then goes a long way. And these kind of things, just creating that relationship, being a part of BRICS, right? Which is, let's move to not support the dollar and dollar hegemony. That's not really the way to make friends and influence people in America. So, and that's how you move on to a really positive place, is put it on the table, address it straight on, resolve it straight on, and get to a really good place. And I think that's where we are.
So according to Mr. High IQ, the paragon of intelligence, India is rubbing the US the wrong way. He wants them to buy US weapons and ditch Russia. The MIC needs their money after all. But the bigger instruction is for BRICS to continue supporting dollar hegemony, to stop trading in local currencies to save the USD from collapse. Now, Lutnick is becoming the dollar henchman, trying ways and means to prevent de-dollarization, because the threat of a growing BRICS is a dangerous proposition for the US. In the first 9 months of 2024, China's trade with BRICS members reached an incredible 4.2 trillion RMB or $650 billion. And this represents a 5.1% year-on-year increase. This percentage doesn't just reflect growing trade flows, it's also an indicator of de-dollarization progressing. Now, when countries trade with China, Beijing will be more than happy to use local currencies. Whether it's the RMB, rupees, or ruble, to the Chinese, they are all a better alternative than US dollars. And this is the lens that Washington is viewing BRICS with. The stronger the bloc grows, the more they will trade with each other, especially under Trump's tariff regime. It's important we realize the extent of China's de-dollarization push. It's not some urban myth. It's happening and is accelerating faster than ever before. In March, China's cross-border trade in RMB hit an all-time high. 54.3% of trade was done in their local currency. Only 41.4% were carried out in dollars. The remainder was probably in euros, rubles, and other currencies, but that's still a form of de-dollarization as well. Which brings us to Trump's tariff war. When you raise trade barriers to the global economy, you cut off trade to and fro. As a result, countries would trade with the next biggest player, which is obviously China. And when that happens, do you think China will be trading in dollars or RMB in default? That's why Lutnick is resorting to all these warnings, because there's no way to reverse the tariff war. Once again, let us make this clear. The US will impose tariffs on the world. This will reduce trade in dollars significantly. The tariffs are here to stay, perhaps forever.
I think that stays, but that is, as the president said, the low rate. I mean, think about the UK. They had a balanced trade with the United States of America. So the 10% baseline is for those countries that have balanced budget with us that are the best. And then those who had trade deficits are going to have a higher tariff. Now, if they really open their market and they really go to town and say, look, we really want to get to fair and balanced trade with America, then the best they can do is 10%. Most likely they'll be higher, but the best they can be is 10%.
So we can expect trade with the US to fall by at least 10% or maybe more. Less trade, fewer transactions. Fewer deals means further de-dollarization. Even Lutnick managed to connect the dots on this one. Another problem with the tariffs is how it just crushes US economic growth. So within America itself, financial influence will continue to drop. The latest OECD projections are out, and guess which economy will get hammered the worst? It's the United States. Yes, global growth will crash and drop by 0.2% on average. However, the US will suffer a plunge of 0.6%. Their growth this year will hit only 1.6%, and that's probably a very generous forecast. When you play stupid games, you win stupid prizes. But look at the economies of India, China, and Brazil. The BRICS economies are insulated to a big degree from Trump's tariff war thanks to diversification. At the very most, a hit of minus 0.1%. Now, Japan is a great example of being too dependent on the US. Their economy will shrink more than the BRICS economies. They exported too much to Trump's economy, and now they are facing a huge tariff war. While US tariffs help Trump take in more revenue, realize who's really paying the toll. He is extracting money from US consumers. Meanwhile, China is the true winner for this trade war. Since countries need cheaper inputs and goods, their trade with China will naturally increase. It's not rocket science, and something we have mentioned for many months. In April, China's international trade with the world hit over $600 billion in April, one single month. And that's a yearly increase of 6%, which is astounding, especially when global trade is expected to collapse. Now, this places enormous de-dollarization pressure on the US currency. China has zero incentive to pay in dollars. Any country would gladly pay for imports using their own currency that they can control, that they can simply print. And understand why Lutnick, Trump, and Besson they are so desperate for the dollar. It's the linchpin of the entire US financial system, and hence the economy as well. Now remember the Greek titan Atlas holding the weight of the world on his shoulders, the exact same thing. That's the US dollar holding the entire fractured economy on its reputation as the reserve currency. Now, the impacts of losing dollar hegemony will be direct and it will be brutal. Demand for the currency will drop even further as a result. This will feed into even more bilateral currency trade. US dollar strength will also get affected. We have multiple banks, including JP Morgan, Morgan Stanley, they're all predicting a dollar collapse well into 2026. Foreign buyers won't be queuing up for US bonds. The currency risk is just too great. Countries like China might even dump their holdings ahead of schedule as well. And this puts the entire US economy at risk. Now, borrowing rates will fly to the moon and push Washington to choose one of three options, all of which are horrific. Either default and not pay, or print money and inflate the debt away, or the unthinkable, spend less and refuse to pay social obligations. There's no easy way out if the dollar breaks. Now, the impact of foreign demand cannot be underestimated. It allows Washington to spend their money on all those military adventures all over the world and still spend a ton on Medicare and unemployment. Now, Trump's tariffs are going to reduce the trade deficit, which will trigger a domino effect on US capital surplus as well. Besson desperately needs countries to buy treasury bonds without question. Just buy, don't ask questions. In 2009, McKinsey found that countries buying US bonds reduced borrowing rates by at least 50 basis points, and that translated to $90 billion back then, but it's likely hundreds of billions dollars today thanks to the 37 trillion debt burden that we have now. The only way the US can stop this is to get countries, especially the BRICS, to keep using dollars, keep trading in dollars. But how Lutnick can stop this from happening is beyond me. Maybe he has a 5D chess move that we all have not seen yet. It's why the Chinese call is more critical for Trump than Beijing. Now Washington needs the call to happen, and for China it's probably just a good to have. They don't really need it because their supply chains are very well fleshed out. Now things are getting very desperate. The US ambassador to China, David Perdue, suddenly posted this on Twitter, a meeting with Wang Yi, as if trying to hint to the world there's still open communication with Beijing. Suddenly talking with the Chinese is mission critical. But make no mistake, this is just a nothing burger. A true trade deal can only be done with a full trade delegation, and you need both presidents to be involved as well. China also isn't in a rush. Less than 3% of their overall GDP is connected to US exports. Their borrowing costs are also dirt cheap, so they can launch the stimulus boats if need be. But the situation isn't the same for the US. Trump's economy will flounder, especially his reshoring plan that needs rare earths. Now, take two critical metals used to make powerful magnets. The US needs these minerals to make the inputs for robotics. That's what's going to power the US factory of tomorrow. Human labor is just too expensive there. But China holds over 87% of global refined supply. They control a ton of production that the US needs, which reinforces the joke of US China economic relations. The US needs to borrow money from China to buy raw materials from China to build their industries and weapons to contain China. It's really wild if you think about it. So we can expect the Chinese to have a big ask, a big request to turn back on the rare earth supply. And needless to say, the central government will probably ask Trump to undo the crazy chip sanctions on Huawei amongst many others. And there are simply too many to count at this point. Now, as we speak, I have more breaking news for you. The fire hose of chaos never seems to stop. Apparently, the White House is saying that a call with Beijing is coming this Friday. Sounds like progress, but before you go all Wall Street or Gordon Gekko, we are not in the clear right now. All it takes is for someone to call Trump the taco president, and everything could just collapse once again. It really boils down to one simple question. Can Trump admit to his policy mistakes and reverse the chip sanctions? Now, if he can, then a bigger trade delegation can be sent to discuss the terms. But if he wants to play hardball and tells Beijing to bow down, then everything will unravel on Friday. Trump said no more Mr. Nice Guy, let's remember that. Well, he has to be a nice guy or China won't bite. Now, a lot is at stake, especially with the strength of the dollar. There's still a lot of downside left. Trump wants to get it lower to boost US exports, but he needs a controlled demolition. The trade weighted dollar is still trading near its 40-year high, and this makes US goods more expensive versus their trading partners. It is still 15% above its long term average, so more downside potential to go. However, a weaker dollar also makes imports more expensive. The US has not solved their supply chain crisis yet. Almost everything has to be imported in, especially rare earths. So closing the Chinese deal is just as important as ensuring the dollar doesn't collapse. And if the call does well, we could see a reprieve in the dollar. And if it doesn't, we can expect a further plunge. The dollar could fall by another 5 or even 10% over the next 6 to 12 months. But if we listen to US leadership, there seems to be even more terms and conditions in store for Beijing. Now, Besson says that China has a choice to be a reliable partner or not to be one. And of course, he tied it back to the conditions of them increasing consumption to lower production and let US manufacturing take over. But we all know that is a pipe dream. Besson is asking for the moon here. China won't reduce their manufacturing because this is the main reason why they are still sanction proof today. So the US has to come up with another angle of attack or just drop the pause string and make a deal. But let me know what you think. Will BRICS listen to Lutnick and will Trump play nice on Friday during the China call? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.